everybody. My name is Julia Hazanov and I'm with Keller Williams Realty. And I get people and clients asking me all the time, when I have my listings out, I get buyers so interested in my listing that are ready to submit an offer, but their problem is they first need to sell their current property in order to be able to get in contract on this one. So the question is, what do we do? They know they're eventually going to move. Over their current property, they want to move somewhere else to be closer to the family or maybe to a different state, but they still have this property with a mortgage. So I reached out to my lender, Todd, and Todd Galde, he's known to be very creative and he's always thinking outside the box. So he came out with his excellent program that's called Buy Before Sell. And it's literally what it is. So you are able to purchase a property before you are selling the current one. So you submit an offer, you get it accepted, you get into escrow, we close. And then you take your time, you stage it, you prepare it to sell, and then eventually you sell your property. No rush and stress-free. So today, Todd Galde with Cross Country Mortgage is going to explain us all the different scenarios about this very specific and creative program that he's created.
Thank you, Julia. Truly appreciate the opportunity.
Great.
So this is a topic that is on many people's minds, especially those who have been in the Bay Area for a long time and they've got a lot of equity in their home. They're semi-retired. They're getting close to, wanting to make that transition to their next chapter in life. And maybe it's to be closer to the grandkids, right? To maybe move out of California. We've heard all about, people are leaving California, right?
Yeah.
And many of those, can't make the exodus because they haven't sold their current home or they think they have to, right? And so there's actually ads on the radio right now. Many of the largest real estate firms in the state have partnered with bridge lenders to help solve this buying before selling dilemma, right? And in almost every case where there's bridge financing being proposed, there's always income or employment that's required, right? And so for those people that are retired, or maybe their income just isn't quite high enough, if you have to qualify for the bridge financing, you can't buy before selling, right? Regardless of how much equity you have, right? And so we actually have a loan that is very unique in the country. Very few lenders, if any, have it, that doesn't require any income or employment for owner-occupied transactions. It's completely unheard of. It does require equity, and it requires good credit, and it requires some cash in the bank. So using that loan, along with a myriad of other solutions, I basically said, I want to create an all-encompassing solution for everybody who wants to buy before selling, right? Not just those who fit a specific parameter. Mm-hmm. So for today, what I'd like to do is break up the option of buying before selling into 5 different phases or 5 different ways to make it work, from the easiest to the hardest, okay? And so we'll start with the easiest way, right?
Okay.
Which is someone who has a lot of equity and in their home, they have a lot of income, very strong income, and a strong down payment. So in theory, this person, this home buyer could actually purchase their next house with, say, 20, 25, 30% down before having to even list their current home. And their income can cover the mortgage payment on their current home, it covers the mortgage payment on their new home, and it covers all the car payments and everything, right? That's the easiest way, right? Now, many of the big banks will not allow that to happen without their current home being listed, right? Or in many cases, under contract before they'll be able to purchase, because you can technically only have one owner-occupied home at a time. And so the big banks say, no, we need you to sell this first, right? We don't require that. And so if you have a strong down payment, good income, and it doesn't matter how much equity, quite frankly, you can purchase before having to sell.
That's amazing.
That's the easiest way.
Okay.
Now, how many people fit that profile, right? Who make close to $1 million a year and who have hundreds of thousands of dollars for down payment? Very few, quite frankly. So the next easiest, or next hardest, I guess, is someone who has lots of equity, okay? And statistically speaking, and I've run these stats in almost every county across in Northern California, about 30 to 40% of every neighborhood has a ton of equity, has 60% of equity or more, right? That's a lot.
Wow.
And that's trillions of dollars in equity just here in the state of California. And many of those people are retired and they just don't have the income, but they would like to make the move. So there's lots of equity. So this is the second one. Lots of equity, but they don't have the income because they're retired, right? But they do have a nest egg for down payment, right? So in the case of someone who has a lot of equity, they don't have income, let's say they're retired, but they do have a strong down payment. This is where the loan that I mentioned, I call it the 9 loan. It's actually, I named it that. Technically, it's not called that. It stands for no income, no employment, the 9 loan. Using the 9 loan, someone with no income, okay, can purchase their next home with 25% down, okay, without having to even list their current home. That seems to be the most common right now that I'm dealing with. And we are originating on average 1 a day.
Wow.
Transactions like this. Yeah, we've got 5 that are closing right now, where the income's not high enough, but they've got the down payment and for the purchase, right? And regardless of what's going on with their departing residents. And so we're able to close on that transaction. Now, the beauty of this, I want to stop just for a second, talk about the benefits of buying before selling. As this is part of your conversation when you're meeting a new list, like someone who wants to list their home, or or a buyer who thinks they have to sell first. What are the benefits of buying before selling? There's an emotional component, right? Not having to rush, right, to purchase.
Yeah.
Find a house because you've got a seller or you've got a buyer trying to kick you out, right?
Yeah.
If you're able to purchase your next house before having to even list, you get to take your time, right?
Yeah.
There's this peace of mind. And so you get to take your time, whether it's a month or 2 months or 3 months, and make the move on your
Especially
timeline.
in this market, right? That houses doesn't last as long, and
Yeah.
once you find a property, you need to be very quick and on it, so you don't have to rush and stress with selling your current property. So this could be the perfect,
great point.
Perfect program for that.
Yes, that's a great point. Because the day you put that for sale sign in the yard, you're going to have people banging on your door, right? Hundreds of people, right? And so you don't want to deal with that just yet. So the other benefit is financial, and that is this. And statistically, the National Association of Realtors has stated that you're going to get 3 to 5% more resale value on your home if you're not in it when it's listed. And so you can imagine if someone has to sell their home first, and Grandpa Joe has his dirty underwear hanging on the banister, right?
Yeah.
Not literally, but that's harder to sell because their person's stuff is in the house.
Yeah, and then you need to arrange all the showings, and sometimes they're not always available. So it's always better to sell a house when it's vacant. That's for sure.
Exactly. And that's what NAR, the National Association of Realtors, says, that if you're gone from the house and Julia gets to come in and stage it properly, polish it all up, maybe new window blinds, right? You're going to get at least 3 to 5% more return on the sale of the home if you're not in it.
Yes, because we want to make sure it's selling ready, like almost like a new home. When you step into a new home, it's all like flawless, everything is clean, smells great, have a good ventilation. That's the idea, and not when somebody's living there and you can still smell the owners in the house.
Exactly. Great point. So if you've got lots of equity and you've got a good strong down payment, but you don't have the income, maybe you're self-employed and you can't qualify because you write everything off on your taxes. Same thing applies. We can use the 9 loan to help facilitate buying before selling. Now, the third way, so we're getting progressively harder here, is you have someone who has lots of equity, right? Almost no income. Maybe they're self-employed, maybe they're retired, but from a conventional standpoint, there's just not enough income to qualify. And there's no down payment, right? So this actually is a lot of people. Ironically, so Pleasanton I don't know why, has a lot of homeowners who have poured, every penny they made goes into the equity of their home. So they have a lot of homes with no loans, but there's no savings, right? There's no long-term, and so all the equity is in their home. So how do we solve that? Well, using the 9 loan. So we can actually do what's called cross-collateralization, where we put a lien on the departing residence, right? And then we also put a lien on the new purchase, called cross-collateralization, where you have 2 liens on 2 separate properties, but it's technically one loan. And so if you imagine, really quick, if you've got, this is the old home, and then we're moving to the new home, right? This is the new one. We'll make it a little bit, no, it's not much bigger. And you've got, so there's no mortgage, okay, on this house. What we end up doing is we put a lien here. This money comes over to here, right? And so there's one loan here, and then we attach a second loan here to make up the purchase. And technically it ends up becoming it's essentially a cash purchase using the equity. Now, obviously this one has to have more equity than the purchase price, right? Otherwise the coverage doesn't necessarily work. But that's one way to facilitate it with no income and no money for a down payment. This is called cross-collateralization. Cross-collateral, something like that. I think there's too many vowels. Anyways, so that's a very plausible solution and a very good way to make it happen. We just closed one in Walnut Creek recently. Yeah, it's a great story, and I won't bore you with the details. But we basically did this with her, the condo in Walnut Creek, and she purchased a single-family home, and so we crossed both properties, and then she sold this, paid this down, and then right now we're closing on a 30-year fixed. We're converting it to a 30-year fixed, low monthly payment, and whatnot. Yeah.
So what most people asking me is, are they going to have 2 mortgages, 2 separate mortgages on the current property and the next property they want to purchase?
Well, it depends. So in the case of someone who has a mortgage, right, on their current home,
yeah,
and then in fact it works in any of these cases if they have a strong down payment. And we're able to use, for example, the 9 loan.
So strong down payment is like about 25%.
Yeah, exactly, 25% or more. Then technically, yes, they would have two payments, right? So there is a little sense of urgency, right, to sell, but it's not coming from any other reason other than cash flow, the need to get rid of this loan, right? Now, most people don't understand that when you close on a mortgage, you don't have a mortgage payment until a month and a half later. So let's say you closed on July 17th, you actually wouldn't have a mortgage payment due until September.
Okay.
So there's a little grace there, and if you're able to move all your stuff out in 2 weeks, and then you're able to come in, polish it all up, and list it, you may only have 1 payment, right? Or none, depending on how fast it sells. And that is, by the way, this is one thing I want to make a very good, strong point of. My solution for buying before selling is very customized. In most other cases, when there's bridge financing, right, involved, there's only one way to do it. And so if you can't do it that way, if you can't qualify for the bridge, or you don't want, in some cases they buy your house, right, for you. If you don't feel comfortable with that and giving up the control, then that solution doesn't work for you, right? So I come along and I've got multiple options to make it work for someone, right? And so that's the beauty of that I haven't seen anybody else do is offer multiple options for buying before selling. Now, 4th one is, let's say we have little or no equity, we have strong income. I'm trying to read my chicken scratch here. Little or no equity, but we have strong income and strong down payment. So that's actually where that's actually similar to the first one, where we can either use the 9 loan if necessary, if the income doesn't carry everything, But if the income does carry everything and you've got the 25% down, right, or even 20% down, we don't care about the departing residence, being sold, regardless of how much equity is in it. So that's another important. It's very similar to the first one, except there's very little equity. But if you've got the down payment and you've got good strong income, it actually works. We don't care if you have your departing residence still on the market.
What if it's somebody that has no equity in the house? They cashed it out, or it's just not enough,
Yep.
and they have no income, like they're unable to find a job or they've been retired.
Yep.
What's then? But
Yeah.
maybe they have something in savings, right, in their 401k or somewhere in their savings account.
Mm-hmm.
Can they qualify?
Yes. So that's actually similar to the second one, where we use the 9 loan, right?
Mm-hmm.
So if they've got 25% down or more, with no income and no employment, but they don't necessarily have equity in their departing residence, the 9 loan can be used to purchase their next owner-occupied house without any income or employment. Okay?
Wow, that's amazing.
Yeah, and some people, I think we're winding down here, but I want to make it very clear when I'm presenting to large groups of realtors or consumers looking to purchase. There's always someone in the crowd who says, "Here we go again," right?
Mm-hmm.
Reminded of 2007, 2008, 2009 when the market imploded, right? Now, if you remember, you might be too young to remember this, but for those that aren't, the reason it crashed prior to 2009 is not because of no income or no employment or stated income, right? It's because we were leveraging 100% of the home. Okay, we were giving loans to people with no money down, no income, right, and even poor credit, right? That never should have been, right? And what I tell people who make that comment, if the 9 loan were the only way to get no income financing back prior to 2009, we never would have seen the collapse, because it requires down payment, so equity, good credit, right? And
FICO score,
and liquidity,
that's the credit.
Good credit, and liquidity. You've got to have some cash in the bank, right? In order to qualify. So
what about people that they still have stuff that they own? Like, let's say they have car payments, like maybe some child support or some credit cards.
Yeah. So using the 9 loan, it doesn't matter,
Okay.
because we don't take into account any of that.
Oh,
Yeah.
okay.
So there's another option. Remember, I told you there's way more than 5, right? There's so many different options. We're about to close on one up in the North Bay, where the homeowner had lots of equity, and the income didn't matter one way or the other, but they didn't have the down payment. So we did an equity line, a HELOC, against their current house, right? A $400,000 HELOC. That became the down payment on the purchase, on the 25% down on the purchase. And so now they had to have some income to qualify for the HELOC, right? But they didn't have enough income to qualify for everything, but we were still able to make it work with the 9 loan, right? So like I said, there's multiple ways to make this work for homeowners who want to buy before selling. And the beauty is we get to customize, right, based on their personal criteria, their needs.
Wow, that's the beauty of it. It's each case on its own. So whatever your case might be, you definitely want to reach out to Todd, and he can assess your situation and come up with a creative solution. Yep.
And if you go to buybeforesell.com, there's going to be all of these options, these scenarios and more. There's reviews and testimonials as well. And it's a great website to find more information. And certainly, you can reach out to me, but reach out to Julia as well, and then we can collectively come together and have a meeting and see what works for you.
Yeah.
So thank you.
Thank you so much,
fabulous.
Todd.
I appreciate the opportunity.
Yeah. That's so helpful, because now we have the answers, and we have all the solutions.
Yeah.
So
We can make it work.
Make it work.
All right.
Yeah. Thank you for staying with us, and we hope you like the video.
Excellent.
Share and subscribe, and I'll see you on the next one.
Thank you so much.
Bye.